Hi, my name's Anthony Beardsell. I spend my days trading and teaching other people how to trade for a living. And today's video contains analysis of a trade that I made this morning and the analysis actually contains two charts, the 5-minute chart and the 1-minute chart. The 1-minute chart is my normal trading time frame, and I use a time frame which is 5 times longer than my trading time frame as my master time frame, and it's the master time frame that enables me to decide whether I'm favouring long or short trades. And in today's video I'll show you how to combine use of an analysis of both trading time frames, the 1 and the 5-minute chart, in order to assess what the market's likely to do, and also how to get a good reward to risk trade out of that analysis. So I look forward to taking you through that now. So here we are. I've gone short on the Dax, and on the left hand side we've got the 5-minute chart, and on the right hand side we've got the 1-minute chart. So this is my master trading time frame, and normally this is my trading time frame on the 1-minute chart, but on this particular occasion I've taken the trade based on analysis of and on the 5-minute chart, analysis based on that also aligns with my analysis of longer term time frames of the daily chart and the 30-minute chart, which you can't see on the screen. But basically the market has been in a downtrend. It's down on the day and it's in a trading range. This is a trading range, and the reason that I know it's a trading range is because essentially the price action is level. It's going down slightly, but it's, the market's coming up here, rejecting, it's coming down here, rejecting upwards. So there's a level-ish a level-ish type of price action within the market, which is what happens in a trading range, and it's sloping down slightly, which means that it's actually sloping in the direction of the longer term trend, and there are high, lower high, lower high, low, lower lows appearing in the market. So the trading range is corresponding with the long-term trend. You can see I've got some exponential moving averages on the chart. This is the 90 exponential moving average, the darker blue line. The red line, wavy line here, is the 20 exponential moving average, and the lighter blue line is a shorter term exponential moving average, which is the 8 exponential moving average in this case. And you can see that the longer term exponential moving average is moving down, and price action is largely taking place below this longer term exponential moving average. So I've entered the trade just now. You can see this is where I entered, and I'm expecting to get a reward to risk of 1.8-ish to 1 of risk. So a reward of 1.8 to 1 risk. And so I've set my limit order here to take profits at this level, and I'll be out of the trade for a loss if the market goes to this level here. So I've placed the stop order above this particular spike here, and on the 1-minute chart that corresponds with the spike at this level here. I think that moving averages are quite important in trading for one reason and one reason only, because they represent value. And when the market is being rejected lower from value levels, and also when the market is rejecting higher from value levels, then that tells a story. And where it spends most of its time is generally where it's going to continue to spend most of its time. So if it's rejecting below the moving averages and spending most of its time below the moving averages, you can see rejection of the longer term moving average here, 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 and here and here and here, and each time the market went down. So I'm basing my trades always on probability. Probability and not certainty are key in, this is a key concept in trading. You never have certainty. And so the trading range that I was talking about, this is the trading range here. You can see the scope of the range here. So the market is currently in the top half of the trading range, and I won't take trades in the bottom half of a trading range to go short, because they're likely to fail at this level here somewhere, and the market's likely to go back up. And I won't take long trades in the top half of a trading range, because the market is likely to go up and then stall and go back down. And when the range is sloping downwards, then I'm in favour of taking short trades. So that's my analysis, and I used the 1 minute chart as confirmation for all of that. Now, a couple of other things that you can see on this particular chart are that we've got a double top here. Okay, so that's the middle of the double top, the low of the middle of the double top, and I've just entered a trade just below that level there. So this is the middle of the double top, and I've entered just below it. And normally with these type of trades, with double top trades, it's a valid double top, and normally you'd expect the market to give you at least the distance between the low of the middle of the double top and the highest high in the double top, which is the first high. And so based on that, you'd be expecting the market to make a target of at least here, which corresponds with this level here. Okay, but you can see that my limit order is lower than that. It's actually off the screen on the 1 minute chart. It's down here at 12,085, and that corresponds exactly with this last major low here. So I'm expecting the market to retest that low, and then we'll see how it goes. Every time it's got past this level here, you can see this is a big red candlestick, big powerful red candlestick. This was on the open at 8 o'clock this morning. Another big red candlestick followed by another one, taking it down to these lows, and then when it's gone up, it's put in a big green candlestick. All of the action pretty much took place below the 90 moving average that I've got on, exponential moving average that I've got on the screen here, and when it went up, it failed at this moving average. So the market's been pushed down strongly. That was a big strong red bar, as was that one, and that was stronger than this move back up here, which had some red bars in it. And so that there, that big red move there, was stronger than the move back up, which was up and down, up and down, up and down, up and down, which gives me confidence that the market is heading back down to this level here. And as you know, I'm always looking for trades that give me more than 1-to-1 risk to reward. And so I'm on the lookout for trading opportunities that give me that, and give me that opportunity for that reward to risk. And with this high here being a significant high and a rejection down from the moving average, the shorter term moving averages from that level there, with there being a double top in here, and with the market breaking the lows of that double top, with it moving, with the market moving below the 90 moving average on the 1 minute time frame, trading below the 8 exponential moving average, trading below the 20 exponential moving average, then once I've seen this spike here, which is a rejection spike, it's rejecting these exponential moving averages, which implies that there's a good chance that it's going to go at least somewhat lower. Now, something interesting on the chart here is that we've got a round number level, 12,100, and that could well cause problems for this trade. It could come down. I'd expect it certainly to come down to this level, to test this level, and it may reject up higher, and if it does, then that's fine. But look what's happened every time it's been around this 12,100 level. It hasn't, you know, it hasn't rejected off that level. It's actually just powered through it on the way up and on the way down. It's powered through this 12,100 level. So it hasn't offered particularly strong support or resistance, even though it's a significant round number. And so we'll have to wait and see what happens with this particular trade. But the overall analysis is that my overall analysis is based on this 5-minute chart, on the trading range that's taking place, that's down sloping as a trading range. And I'd expect now, you can see that price actions move below the 8 exponential moving average, below the 20, below the 90. I'd expect this to propel price action lower, propel it lower. Now, this isn't a trade where I'm going to be looking at the 1-minute chart and thinking, oh, let's see if there are any, you know, rejection spikes down here, because I imagine that there will be. I've taken the trade based on analysis of the 5-minute chart, which is interesting for people. It's interesting because, you know, this could take 20, 30 1-minute bars to complete, and therefore any analysis of the 1-minute chart has to be considering the longer term time frame, and for that I'll look at the 5-minute chart. So unless I see price starting to move above and consolidate above these moving averages, the shorter term moving averages, I shall stay in the trade and expect it to reach a good level of value down here before it starts being bought up again. So we'll see what happens. And got off to a good start. So this is where we entered the trade here, and the market started moving down, and you can see it's actually at the 12,100 level here. It's at the 12,100 level and it's moving down. However, there's a rejection spike. Now, people looking at the 1-minute chart only may look at this and think, well, it's been bought up from the 12,100 level, I'm going to get out and take my profit. However, there's a problem with that, and the problem is that, you know, am I wrong at this stage in taking this trade? Am I wrong? No, I'm not. I'd be wrong if the market went up here and took out my protective stop. Therefore, if I'm exiting my trade here, I'm taking a reward of 0.25 to 1, something like that, of my risk, and that's not good enough. You know, over 100 trades, if you keep taking profits that give you a reward of less than your risk, then you're going to be a losing trader in the long run. So you have to make sure your reward to risk ratio is correct, and there's a 50, I would say at this stage, 50% chance of it actually getting down to this level here. It may stall at the 12,100 level, but 50% chance is good enough when you've got nearly a 2-to-1 risk to or reward to risk ratio. Moving on again, you can see the market went down to the 12,100 level and rejected upwards. Did I get out of the trade? No, I didn't get out of the trade. It's still trading on the 5-minute chart. It's still trading below the shorter term moving averages, which have crossed over now, and it's rejecting below the 8 exponential moving average, which is great. The market, when it's moving down, will keep testing the the 8, the 10, the 6 exponential moving average. It'll keep testing it, and as long as it keeps rejecting, then I'm going to stay in a trade. We're trading these moves. That's one downwards, that's one upwards, that's one downwards, that's one upwards, that's one downwards. We're trading these legs in the trends. And so it's below the 8 exponential moving average on the 5-minute chart. It's rejecting below it, and I'm going to stick to my guns unless I see something that tells me I should be out of this trade and take my profits. You know, may happen down here somewhere. I've got to get at least 1-to-1 reward to risk for me to really start considering exiting. So we'll see, move on, see what happens. And you can see what happened here was the market moved up a 1, an almost A, B, C pattern trade. It's just a pullback. That the market's moving down, pulls back in a 2-legged move and rejects off the 90 moving average on the 1-minute chart, which the 90 moving average on the 1-minute chart is fairly closely related to the 20 period exponential moving average on the 5-minute chart. So the market's moving down again now towards the 12,100 level, keeps rejecting off that level, but it's still moving down. So we persevere. And we're right at that, another rejection of the 12,100 level here. This is the 12,100 level, and we've got 1, 2 rejections now. Now, if the market were to go above this level here, this being a low, lower low, if it were to go above this level here, you might get some sort of reaction that would take us out of the trade, but I'm not moving my stop down to this level because we've got a very slightly lower low and the market's making lower highs. Lower high, lower high, lower high. So on the 5-minute chart, the candlesticks are still rejecting below, off, lower than the 8 exponential moving average, which is a good sign. So stay in the trade. Some people may look at this and go, wow, big rejection, big bullish bar. That's true, it is. But this is bigger. This big red bar here at the same level. Traders are selling here. They're selling, and as long as they're selling, they're going to beat the bulls who are trying to force the market higher. And the reason they are is because on lots of different time frames the market's moving down, and so traders are going short on lots of different time frames. This really, you know, you can see the spike here. What does that mean on the 5-minute chart? Doesn't mean anything. And so reason for my trade is still valid, so let's move on. And the market starts coming down. 1, 2, 3, 4 red bars on the trot, and it's starting to reject off the 20 exponential moving average on the shorter term 1-minute chart now, and that's what I want to see. And a big red bear bar there, taking us down to the 12,100 level again. Looking great on the 5-minute chart, looking great. We'll be looking to see what happens at these lows here. Looking at these lows here, and that equates to these lows here. And I'd expect the market now to start thinking seriously about whether it wants to go lower than the 12,100. So I'm keeping a close eye on the trade, but I'm not doing anything yet. You can see my orders are still valid on the screen, and I've got a stop order to take me out for a loss here. Up here I've got a limit order down here to take my profits, and so we'll carry on. And that's what happened. The bulls gave up. The bulls gave up at this level here. So low, lower low, and as soon as the market went below those lower lows, boom, it zoomed down and took out my limit order. So on the 1 minute chart, you can see again, almost draw a horizontal line across there. Market came down, pushed back up, and this level here that was the 12,100 level was offering some support, but the market pressure was too great, and it doesn't matter how strong you think support and resistance levels are. If the pressure is strong enough, it'll take it through a support and resistance level, and the market came up, and the 12,100 level there didn't even get met and wasn't even required in order to provide resistance. The market resisting effectively off the 8 exponential moving average, the 20 exponential moving average, and traders were shorting the market, and they're shorting the market, and they're still shorting the market as we took our profit at the 12,085 level, just below there, and they're still short in the market, and we're reaching these lows here, and I'd expect some sort of reaction at this level here, but I don't care because I'm out of the trade. So that's my analysis for this particular short trade. We're now at 12 o'clock, just after 12 o'clock, midday, so there'll be some slowing down in the market at this stage. Good time to take profits, and you may see some kind of rebound. These are spikes, rejection spikes down here, and I'd expect this to move up, possibly go back up to the 12,100 level at this stage. And that's what the market did. So the market did rebound, and then it started coming back down again. So as I say, I hope you found all of that useful. My name's Anthony Beardsell. Do join us at the Excellence Assured Trading Academy if you want to learn how to trade, if you want to trade for a living. Getting a proper education in trading is vital. And in the courses that we have, I take you through all of my analysis, all of my understanding as to how professional traders trade and how I use that knowledge to trade myself professionally in the market, and have done for many years now. So I look forward to speaking with you again on the next video. Any comments, questions that you'd like to make, please leave them below, and thanks ever so much for spending time with me. Bye for now.